Yes, Carl, we have construction spending along with the ISM manufacturing. Let's start out with the ISM manufacturing, shall we? And realize the headline number has been down under 53 months in a row. Will it be 4? Yes, it is. 4 months in a row. 47.7 is the headline. 47.7 would comp in to our most recent month, which was 47.4, just to see how it dovetails in. 51.3 on prices paid. That reverses 4 under 50s in a row, which is very good news. 51.3 is the best since September of last year. Employment, 49.1. That's the first month under 50 since November when we were at 48.9. 49.1, obviously a bit higher than that. And finally, on the new orders side, we have 5 under 50. This now makes it 6.
Welcome to another edition of the Warlords of Wall Street. Well, there was a lot of business taken care of today. Consumer prices on goods, the report came in, and for whatever reason, they're sticky and not coming down. But we talked about that a little bit. The consumer just hasn't backed off on buying his macaroni and cheese. The bond yields jerked up a little bit higher today. The 10-year was flirting with 4% for most of the day, still rubbing that right at 3.99. That's the highest it's been in quite a while. Wall Street will end up sweating this, and it'll end up raising speculation again on what that means to even lower earnings. Because as these rates continue to tick up, we covered this, as these rates tick up and then they tend to stay there a while, borrowing and the cost of doing business remains elevated. If that remains elevated, that's got to have an effect on earnings. And it may not just affect one quarter, but maybe two. And the longer it stays elevated, the more quarters it affects. At some point, you can pretty much bet that the warlords of Wall Street had maybe built into the market in their assumptions that maybe that there was a couple of quarters where this was going to be some compressed earnings, but the longer it goes, it means the more quarters are involved, and now we're getting into uncharted territories. So just be advised. Now, the bond purchases in response to even the 10-year hitting 4, but the short-term rates are closer to 5, those purchases came in at around about a 16-year high. Now, it's not the highest it's been in 16 years. It's essentially, there were 4 other occasions over the last 16 years where you've seen the bond purchases and the sentiments up around 35 points, give or take 35%. So that's a damn respectable number. Mortgage rates were creeping a little higher as well. They're up 50 basis points just in February. And of course, that's going to have an effect on mortgage applications, which are now at, or as reported, a 28-year low. Now, 28 years, that's an awfully long time, and believe it or not, that was the first little piece of good news that the Federal Reserve will consider. They want to see those housing applications slow down. A lot of the CPI numbers, a lot of the core numbers have a big chunk of it. Some amounts up to 40-odd% of the number that's comprised is made up of housing. And the truth be told is the manufacturers, the builders of the houses, aren't going to do a lot, maybe to shave the price. They may come down just a little bit, but on the back end, it's really about trying to buy down the interest rate to keep people walking in the door and being willing to pay up for a house. The higher the interest rates remain, the more expensive that is for the home builders, the less likely they'll do it. So this is a bit of a soup that's going to end up having an effect on home sales. We'll see that in the coming weeks when those reports come out. The bank stocks certainly didn't like the news on interest rates and mortgage applications being down. As we all know, banks are the principal, well, maybe not even so much anymore, but most of the banks are principally involved in long-term mortgage lending. That's part of what their charter is all about. So the bank stocks were a little depressed because of that news. Because the bank stocks were depressed, we came and went from our Direction Regional Bank Fund. The symbol is DPST. We rebought it today at $23.90, And I just want everybody to remember that these types of leveraged ETFs are aggressive plays. They're meant for very short term. And what we're looking for is to catch about a 5% bump on this, like we did last time, and get out. So we were able to accomplish that before a pullback. And this is exactly the yo yo effect that we want to take advantage on a short term basis. Tesla today had, or I should say after hours, had its first investment day ever where we were talking about numbers and what have you. And we wanted to hear them tell us all about, are they working on a new model? Everything's getting a little stale over there. New model would be nice. I wanted to hear about the battery manufacturing capabilities. Are they continuing to expand? It seems that they're doing the best that they can. China reopening. That's an opportunity where they were shut down there for a little while. Now that China's opening up and they've dropped their prices over there, we're hoping to see better numbers coming out of their Chinese operations. So the rest of the portfolio was fairly static, down just a little bit, because essentially there's not a lot going on with the market other than these rates are toying up and down, and people are doing a lot of hand wringing over it. So I guess we're waiting on a positive, something positive to come along that would end up being a catalyst to move some of our stuff forward, because we are sitting in a lot of long-term positions right now, especially with the big technology stocks that we're sitting on. And speaking of technology, the Chat GPT and all of AI is now become the hot buzzword in the market. Um, I've used it, as I mentioned the other day. I think it's remarkable. I think it's going to change the way business is done. I think there's going to be a variety of opportunities, and I'm very pleased that Meta and Google, a couple of companies that we actually have in the portfolio, they're leaders there. They're leaders in those categories. And I think it's going to bode well in the years to come. I'll be very curious to see where this AI takes us, but I think it's going to change the world. Other than that, there wasn't a lot of drama, and there probably won't be a lot of drama for a little bit longer. I think we're just going to continue to see some sloppiness in the market. So keep your powder dry, take your profits when you can, and be careful out there. Have a great day.